the chances of a positive mood, albeit before we got the China data?
James, it was all about the US futures today, and unfortunately they have been pointing down. That's because on Friday the markets left the New York session thinking that there was going to be an agreement on the debt ceiling, and of course we didn't see anything over the weekend. So we have seen the US futures, the S&P 500 futures, down around about 1%. At the moment we're seeing it down about 0.8%, so that's had a negative impact on markets around the region. The Australian market down by 0.4%, but I have to say there wasn't that much happening on the markets. It was snore-worthy. $2.5 billion worth of stock being traded. It's the Columbus Day holiday in the US tonight, so the bond markets are closed while the equity markets are open. Having said that, some of the smaller stocks had some impressive performances. We saw Xero coming back online after a capital raising. That stock was up by about 10%, and in fact the stock's up 171% in 2013, so we saw an all-time record high for that stock. We also saw Cube Logistics reaching a 52-week high. Now this is a stock that back in September won the Chevron port project, and since then the stock has been trending quite nicely upwards. So once again having a good day. And Bega Cheese, despite missing out on that Warrnambool bid so far, we saw that stock reaching a high as well. So some smaller stocks reaching 52 or all-time record highs, but really the market's focus is the US at the moment, and with the US futures pointing down, it was always going to be a difficult one for the Aussie market.
News around today is very much headlined by Oz Minerals, Julia, and the copper production downgrade. Oz Minerals, your thoughts on the outlook? I mean, this is a company that I suppose there have been some question marks over, particularly on the outlook and the whether or not there's much of a long life left in Prominent Hill, its key asset.
Absolutely, and I think that's the key here for Oz Minerals. It does have a $750 million war chest, so it does look like it is on the trail for acquisitions, and that's really to replace some of the production it's doing at the moment. We've seen a production downgrade for copper coming through once again for Prominent Hill, downgraded to 70 to 75,000. That's from 82 to 88,000 previously. But not only that, we are going to see the costs of production rising. So C1 costs rising to $1.90 to $2.05 per pound. So that's a double negative coming through for Oz Minerals. And as you mentioned, James, Oz Minerals projects are long dated and they're capital intensive, and that's a problem there. Because if we have a look at Prominent Hill, their main asset, we are expecting to see the strip ratios declining from 2014 and a mine life end at 2019. So they really need to replace those assets. They do have Carratapena, but if we have a look at that one, pre-feasibility due in the first half of 2014, once again, it's a long-dated, capital-intensive project. So it's a difficult one with Oz Minerals. We've seen so much bad news in 2013, and once again today, I think it's the fourth production downgrade that we've seen in 2013. I think it's the cash that's the attractive part of Oz Minerals at the moment, as well as the potential of its future projects. But of course, that's capital intensive. So if you do have a player that has a large wallet like Glencore Xstrata, then they could be interested. But having a look at that copper gold space, and of course, while Oz Minerals is a bad news story, and looking at the share price of Oz Minerals, this is what it looks like over the past 5 years. So you can see that we saw a peak in 2011, and then it was straight all the way down. But that's not the case of all stocks in this area. I mean, if we have a look at Oz Minerals, it also owns a 19.9% stake in Sandfire. And if we have a look at Sandfire's 5-year chart, it's a very different looking chart, where we have seen the share price holding up relatively well over the last 3 years. So if we have a look at Oz Minerals, I think they have been plagued with a number of problems in terms of production and the cost of production, and it's not the case all across the that particular space.